Headlines all say that the fourth quarter profit was down 7%, but that's because of a one-time charge because they took over this Apple credit card business from Goldman Sachs. What do you think of the raw numbers underneath that, which I think show, what was it, 523 on an adjusted basis?
Yeah, so a nice beat for them. I think that's as course. I think you're seeing a little more buoyancy, and that relates to the guidance for this year. So total firm-wide NII came in at 103 billion. And so I think that was a little higher than consensus, and so it was probably a little more supportive. And then the positive comments from Jamie.
That's what I always dig into, are Jamie's comments. He has positive things to say about the economy, that the consumer is hanging in there, that small businesses are hanging in there. But he does express some concerns about the risk potential. And I think the one that jumped out at me the most, he says geopolitical risk, which we say basically every quarter for many years at this point, but the higher risk of sticky inflation. Does that concern you at all?
Well, it certainly does, and we'll get some more data at 8:30, and that will drive the banks, too, as well, in terms of the rate environment. But, we've seen the trend come down, and we have lower energy prices and lower food prices. So we're starting to see some of that come down. And I think even in spite of that, if you think about just investing in the banks today, this is an environment that we all dream about. You have a normalized yield curve, you have growth in the economy, you have confidence from the consumer, and then U.S. household net worth. I mean, that was up $6 trillion last quarter, 45,000 per household. So the U.S. household, which is 70% of the consumer, is in great shape. So I think this is what we all look for in terms of driving earnings and the fundamental backdrop for owning banks.
Yesterday, all of the stocks were down, though, some of them more than other, because of the comments that the president made about how he would like to see credit card companies cap the interest that they charge consumers on those credit cards at 10% for a year. How big of a deal is that? How do you play that out? And obviously, there are going to be some banks that rely more on that those lines of business than others.
Right. So we did go through our sensitivities, whether we follow an Amex or Synchrony. And so there are different potential effects there. I think there's a lot of motion in terms of the puts and takes about ultimate policy and what will drive that. And we do need congressional approval for that. So we'll see what happens. But like the drug stocks last year, this means that, they're kind of in sight for the president. Some of those, and he, as he tries to promote sort of more affordability and helping the consumer before the midterms next year. And so we'll have to see how this plays out.
I was going to say, does that change your opinion on any of these stocks at this point? Or is this broader backdrop that you're talking about with the consumer, with businesses, with the economy writ large, is that the more important force?
I think that's the more important force, our $30 trillion economy and the confidence in that, and kind of the tax dynamics and the yield curve that we have today. Some of this is just political component of the environment in the short term. But we're really focused more on the long term and the enterprises like JPMorgan that are doing well.
We also heard from BNY this morning. What's your takeaway?
So they continue to do very well there in terms of the new management team has come in and really gotten productivity out of them. I got to dig into the numbers and the call in terms of their guidance. I didn't have a chance to see that. But there's a bank that's really benefiting from AI as well, implementing productivity. Certainly some great franchises in terms of Pershing and their securities asset servicing business. So they've done a great job, been one of the best financials.
We have to run, but your favorite of all, because we're going to hear from Wells Fargo tomorrow, Bank of America, and then the rest of them in the next week or so. Yeah,
I still am sticking with Wells Fargo. I just think the turnaround continues. They've gone from kind of getting out of the penalty box to really accelerating their brand. And, they've come out of the asset cap. So it'll be exciting to see how they're doing their capital allocation and growth this quarter.